I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. It's a pretty quiet session around the world as world markets digest big September gains. Our futures are slightly positive on Fed Day, the day we've talked about for so long. We've heard months and months and months of taper talk, and we'll finally hear today what the Fed will do. So, Scott, what are your expectations?
Wait, today is Fed Day? I thought it was
Friday. I know
today.
You knew today was Fed Day. Everybody knows today is Fed Day.
We might have heard it once or twice. With that said, it is an important day. It's one of these other days to get out of the way. You know, it seems like during September we've overcome obstacles. The whole situation with Syria started to quiet down. We got away from the fact that Summers, who people didn't want on Wall Street to be the next Fed chair, he's out of the running. So let's get this behind us. So, you know, I do talk to people where I see a lot of the expectations. Some are saying now $5 billion, okay, which I think is low. If they do $5 billion, then it's like, okay, it's like a token saying, oh, we really don't want to taper, but we're going to. You know, then there's talk that, you know, there could be a huge surprise and they could do 15 to 25 billion, which I think would be too much. And why would they throw a huge curveball into a situation that they've been controlling so tightly? So to me, I think it's going to be between 10 and 12 billion. And hopefully that's what they do, and that their communique goes off well, and then we get today behind us so we don't have to worry about these big events, and we can continue just to watch the price action, because that's been acting very good.
Let's say it is 10 to 12 billion. What would that do to our markets today? Is that already priced in?
I think that's priced in. You know, they've been talking that book, so to speak, for a while. The question is, you know, we just had 4% gains in September. We're at 2013 highs. So the question is, what happens over the next few sessions? Do they want to play around with the emotions of people, or, you know, do they want to keep this pain trade that's been pent up since the, you know, the late August lows intact? And you look here at the chart, you will see, you know, the intermediate trend that we've been following since November 12th has been intact during this entire run. Okay, here is where it held, you know, in June, and here's where it just held in late August. But take a look right here. You know, look at this pain trade that was going on into that May 22nd outside day, which also was a Fed event. And what happened is we pushed through, what was that, 1674-ish, went as high as 1687, came back below it, and that right there was an outside day that wound up getting measured and gave us a 5% move to the downside. So here we are now, okay, right near these highs. So what I'm happy about is at least we have levels to trade against. Like, we know we could gauge something here. So here is the prior high, 1709. We're actually opening right near there. Question is, if we do 10 to 12 billion and everything is status quo, do we push through this and get another huge wide range bar? And then what that'll do is anyone that's been shorting this market, you know, thinking we were going to break this trend line here where we didn't, you know, do they get squeezed? And then maybe some people who don't like to be so long at the Fed days have to put some risk on because they're underperforming the market that's up almost 19% for a year. You know, so do we close strong and then open the door for a quick move to 1740, 1760 in the last quarter, which I think at some point in 2013 we could touch this zone? Or do we get this type of outside day, which would then say, okay, little signal that a rest is due, and then we get to see, you know, if we could retest perhaps this gap or where the 50-day lines up, and then I think we go to that area. So the question is, what happens first? And at this point, you know, lots of stocks are on the move, some stocks are digesting, and, you know, as far as whatever time frame you trade, if you're a macro investor, stay the course. If you're trading for P&L and every day matters to what do you take home at the end of the month, that 1709, I think, is your key to the next few sessions.
Well, speaking of staying the course, we've talked a lot about the 2013 theme of going long the TBTs, playing rising rates. So on Fed Day, the TBTs and gold are always in play. So if we get a pullback in the TBTs, is that a buying opportunity?
I think so, and I'm sticking to that thesis. So far, it's worked for a lot of people to kind of hedge against their bond portfolio. That's probably losing them money, but if they went long the TBT or short the TLT, they've mitigated that with outside profits. I think that today is one of those inflection point days where all eyes are going to be on rates, and some are saying that once this 10 to 12 billion or whatever it is comes out, that the move is priced in, because we went from like 1.8 to 2.84, wherever it is on the 10-year. But I personally think even if they don't go up today, within the next, could be 3 months, 6 months, 9 months, we're going to be 3+%. I think my target for 2014, which I haven't really published yet, could be over 3.5 in the 10-year. So with that said, you look at the TBT, that means we take this out. Okay, you have a short term, you have this intermediate trend that we're following. Maybe today is a catalyst to get us above 82 and get us, here sooner than later. If for some reason they sell the event, because everyone, you never exactly know what they're going to do. You'd have the 50-day, which we held right here in August, and then if we do get a more of a corrective type move with rates, okay, here is really big support at 72.75, and I think that would be a gift. But I don't think that really happens. Well, gold's likely to be in play today, as I said before. So what are the key levels to watch in, say, the GLD? It's like down another dollar today. I think, what was it, 2 weeks ago? Or first in June 28th, we're like, okay, I think this area or the blood industry lows in gold is buyable. I think that was between like 114 and 116. And then 2 weeks ago, around 135, I'm like, even if it goes higher, I think this is a sellable area versus, adding here. And then lo and behold, you look at the chart of gold and you'll have seen, many different, action areas. This was when this overall big wedge type pattern broke to the downside. Here is when macro support got broken, which we talked many times before it happened at 150. Then you had this nice tradable bounce, okay? Because look at the size of the move from 170 all the way down to 115, pretty in a short time period. So anyway, with that said, here was a bounce, here was the add-on trade, okay? And then right around here, we're like, what? To be safe, it's probably, time to lighten up. And then now this trend broke back to the downside, and now it's just like kind of drifting lower. You have one point of reference here, 123.5, if it gets really, intense to the downside, and then you have the lows. I think Goldman Sachs came out a few sessions ago and said they think gold has the vulnerability of going back below 1,000. If it's going to do that, it's going to have to get through those June lows first. Right. All right. Well, let's turn the spotlight onto social media stocks. This group has been the place to be. They continue to be on the radar after Facebook's nice move yesterday. Do you think we'll get continuation on Facebook today? It's in the game, right? They boom, put the chart right back on in track. And if you look here at Facebook, social media stocks have been rewarding on all time frames. I just like to always show this cup and handle pattern because sometimes they take longer to develop than others, but ultimately, really nice pattern going into last quarter's earnings, and then boom, ignited. Even if you didn't play it into earnings, you could have waited to see it digest above prior resistance, and now look at it. Go quickly to the daily chart, and you'll see right around here was new highs when everyone upgraded it, and it couldn't go up. That was your signal to lighten up a little bit. If you did, you missed a decent move to the downside. It closed below the 8-day, but it only did it for a day. It wasn't like closing below the 8-day, no interest, falling apart, boom. So we talked about this 42-43 pivot for maybe a red dog reversal into the 21-day or trade against it. Look what happened. Anyway, with that said, the high here is 45.53. It was upgraded this morning. I'm not sure if it's going to have enough power to continue this move that was real strong yesterday, but ultimately, at some point in 2014, you're going to see a 5 handle, for Facebook. Could happen sooner than later. All right. And LinkedIn, we've talked about countless times as one of the winners out there, and it has been resting, but it looks like it's hanging in there. Yeah, it's hanging in there, and it can't always be on the move, and it's just no real catalyst right now. This too, cup and handle pattern, big trend, gap, so many different ways to play it. You look at the chart here, on the weekly chart of LinkedIn, this was one of the 3 amigos that we talked about, to throw in the drawer, and this was when this pattern was developing also. And this one didn't have a descending channel, it had a horizontal channel, big move up, then it continued after holding. So anyway, you go here, and you look at this trend line here, this very accelerated one, it's, it looks like it's testing it. So, if you're very short term and we go below 243, it could correct a little bit down to some of the bigger moving averages. You go to the daily, you can see it a little closer. Here it is. But ultimately, it's holding in there, And every time if you would have gotten scared out of it and didn't look for a reversal pattern back in, you're upset. If you're a long-term LinkedIn fan, I think you stay the course. If you're trading it short-term, make sure that it stays above this 243-ish.
Well, Facebook and LinkedIn are some more popular names to talk about, but what about Yelp? Was actually able to close the day up 5% yesterday, closed on highs, so maybe traders can get another piece of this action today.
This has been a stealth mover. Our traders go to it when there are setups, and you look here, another social media stock, another new issue that if this one also, look at this, this was a little different. Okay, here you also have, this I wouldn't say is a cup and handle, but kind of rounding bottom. Okay, and then once it gapped up and held higher and then took this out, look at this move. You can be a stock picker. There are 2, 3, 4 baggers out there. You go to your daily chart and you'll see a little bit closer what's been going on recently. And last time we really focused on this, I believe, was when it broke out of this. Look at this nice strategy here. Held the gap, came up, crossed this downtrend, boom. Then what did it do? Let the 8-day catch up. Engulfing day yesterday, so it's still on track for higher prices above the 21-day. This stock showing a lot of strength. Looks good.
Yeah, and then you've got Zynga perking up and gaining almost 6% for the day yesterday.
This is a different story. This is something we can't get that excited about, but if you didn't get caught in that mess, this is one of those, treasures for trash. Mm-hmm. If you bought it when all the hype was around it in the teens, it's in your trash bin. If you're looking at it now with a constructive lower level base, it could be, a decent percentage winner. And you look here at Zynga, you'll see, remember way back then, look at this, by the way, how blaring it is now when you have a shooting star type top. And then obviously it broke support, then it broke support here, and now it's, all the way down at this lower level, under accumulation by somebody. They have a new CEO, they're trying to redo their business model a little bit. So all in all, if you're holding multiple positions, something you could do. It really has to get above this downtrend to get a little bit, more interesting. I do think that as a risky play, very, very risky, that at some point between now and the middle of 2014, this gap gets filled, could be above 450, and that would be a nice percentage move for somebody that wants to put something riskier in their drawer.
Exactly. All right. Well, we're coming up. We're going to go in the trenches with 3D printing stocks, but first a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with 3D printing stocks, which look like they could be setting up again. Take 3D Systems, for example, which gained almost 7% for the day yesterday, closed on dead highs. So this is one that could definitely see some continuation today. Yeah,
and this one's been leading the group. And this whole group sector as a whole in the past few years has been on fire with lots of different trades for different traders. I'm still waiting for them to be like the Jetsons, where you could type in "make me steak sandwich," print it out, and well done French fries, because I always send them back with the waitress who always forgets. But anyway, there's just so many things that these companies are starting to do. New technology, new innovation. That's the key ingredients for winners and multi-baggers, which these have been over the course of the past few years. As a trade, though, you look right here. Finally, remember this base that we were talking about, like 6 months old, tried to break above it, came back in, retested it, held, and yes, it got upgraded and had finally a wide range bar. So at this point, it's above all the moving averages. You do have your 2013 high at 54.78. If there are any stock out there right now that has a potential of making new highs in the year, to me, this is one of them to have that trade continue.
Yes, how about Stratasys? Gained about 3.6% yesterday. Do you think it found that low after a secondary offering?
Well, it's the secondary business is such a crazy business, because all of a sudden the stock starts getting weaker and you don't know why, but someone always does. And you never really have to know why. Every time that happens, all of a sudden, boom, spot secondary. So with these new companies, they need money. They need to keep growing plants, grow their business, sales teams, blah, blah, blah. So from where it was above 110 to the actual price of 93, that could have been the discount. I think that's where it was priced, so maybe all the supply is gone. Closed pretty well yesterday, I would say. At this particular point, if it could trade above 97.39, there's no reason why you can't at least get a trade back to the 100 area. And then at some point, this stock, it seems to make new highs every so often, and this trend is still strong. So, if you didn't get caught in the noise, maybe in this area, buy something for a bounce and then trail it for the longer term, which if this group continues to make headway, and keep printing away, there you go.
Well, what about one of the newer issues, X1 Group? What do you think here? What is the potential setup?
Well, this one, because of the way the group's been, I think it's up 2-3 times since the IPO. But recently, there's been some technical damage, and you look here at this, this stock, this new issue that didn't come public that long ago. Okay, gave you a really nice trade from 35 up to almost 75. And then look at this trend line. When you follow new issues and you follow momentum plays, you have to be careful for when something changes. Here's where it broke below the 21-day, and here's where it broke that trend line. So, when the music's over, you don't want to be the last guy in the chair. So from that, you've had a pretty sizable move to the downside. So if you're not caught in it, I don't have any either, I would say maybe look at 49. Okay, you could probably get some type of red dog reversal here for a trade. I don't know if it's going to be making new highs anytime soon, but I know that this group does have dip buyers here and there. And if you want to do it, play with the plan, 49 is the pivot, look for some type of bounce, and here would be resistance 1, this would be resistance 2, but first you got to see some kind of red dog reversal or something to give you an indication that bounce could happen.
All right, let's do some quick hits here and talk Apple. We're actually getting some good reviews on its new iPhones, perhaps helping it to bounce and close back above its 100-day yesterday.
It was oversold enough where a week ago it was at 500 and change, so down to 450 was worth a look. You look at the stock, you'll see that it was a very tradable move after earnings, which was very good for us. This was your calculated entry. This is when it took back the 200-day. And coming into the event, no one was really sure if there could be more momentum. But Tim Cook did not do much to wow anyone, and this 503.50-ish was my stop. From there, really quick move to the downside. So into this area where it broke out from, yesterday was my focus, and those on the VTF saw me be, buying it below 450 for a nice trade, but I only took it as a nice trade. So today I don't come in with it, but perhaps as a trade there above 461 to fill this gap to the 460 area or into here. So at this point, it's a much slower trade. It's not as pent up as it's been since the double bottom here over the summer, and there's like I would say mixed headlines. One is that the demand for it isn't wow, and then the other is now the reviews are like, the fingerprint's not just a gimmick. The software is a lot faster. It's a quality product. So it is very quality. There's just no wow right now.
Right. At first, people were not impressed, but now that they're actually getting their hands on it, it seems like we're getting more positive reviews.
Right. It is reliable and quality, and it's going to be people are going to buy it. The fact is, it does the trade change, and right now it's half empty again for Apple versus half full, which it's been since earnings.
Right. All right. Well, how about Amazon? After 4 days of rest, Amazon got back in motion yesterday. Do you think we'll see continuation today?
I think yesterday was the day that traders were excited about it. Now, it could continue, but the setup's not as good. You look here at the chart, you'll see, here's when it went back below this pivot, but then broke above this descending trend line here for a nice trade. Then it held higher, held above the 8-day, digested. A lot of guys are talking about 301, 302. It got through, closed pretty strong. So I guess if it goes through yesterday's high of 304.65, it can continue. The stock still technically acts very well. This lack of momentum after earnings gave you some clues it was out of play. Here, that day one, I talk about what a day one is, and when it ignites a move, led to a nice rally, and now it's back in back in vogue. Looks okay, and it's something back on traders' radars. It's been there for about a week or so.
And Baidu has been digesting last Wednesday's breakout. Where do you think we might get some more upside action?
This one, it's kind of streaky, and there's a good trade, there's a bad trade, and you look at it here, you take, I haven't looked at this in a day or two, and I look at it, it's still good. You still have your gap right there. Then you had that upper level support where a lot of guys caught a decent trade from there into this breakout. From there, it's digested, it's holding above that area. So, it looks like that the trend is still intact. It's still holding the 8-day, and there's more traction here. Okay, I know that China markets and the Shanghai is acting better, and that story there is talking about how it's not a crash landing. It was just a digestive period. So this is still in the go-to list on the price point sheet, and there are setups.
All right. And how about Green Mountain Coffee? Gained almost 2% yesterday, closed back above its 8-day. What do you think here?
This one looks like it would like to go again. You had a breakout, digestion, and it's tight. And these type of stocks don't like to be tight. And you look here at it, you'll see that, here you go. This was the last time it tried to break out. Not a strong breakout, but then it held again, and it's looking pretty good. I would say this thing starts getting above 87-ish. Perhaps we see, new 2013 highs. It's been a nice vehicle this year. This was a big gap up, never got filled, consolidated, went again. So this has had a methodical move to the upside. So it's on my radar today. I think I even have a feeler on coming in.
All right, well, no doubt markets will be awaiting the FOMC meeting announcement, which comes out at 2 p.m. Then we'll have the chairman speak at 2:30. Do you expect markets to be a little choppy ahead of that?
It could be like a quiet little grind into it, and then after the news, you get that back and forth action, and it's not the easiest to handle. You'll hear Sperling probably throw a keyboard or do something like that. So that's what typically happens on Fed Day. People get frustrated because it goes back and forth 3-4 times before finally picking a direction, and then sometimes when it picks that direction, the next day it has a counter trend move. So the 2 days into the Fed, are not the most friendliest towards traders. You can catch action, and there's stuff to do, but it's a little random, and we don't like random. But to get today out of the way would be nice. We know that 1709-ish is that pivot. We get and we stay and we close above that. We could see a new round of short covering and some people having to put money to work. If we go through that early on, squeeze, and then come back and close in the lows and get a May 22nd type outside day, perhaps that could mean that we retrace a little bit of the September move before getting things back on track and going into the same trend we've been in for the majority of the year. So lots going on. The key thing for you to do is just pick your time frame. Do what you do best and keep to your risk parameters. If you're a macro investor, you know what? we talked about it, I think, going into Syria. I'm like, if you survive 1987,
right,
survive 2001, if you survive 2008, putting monthly flows in, you will survive taper day.
All right. Well, with that said, happy trading. Have a great day.